Hello, folks. Um, my name is Winston. Sorry I haven't taken walks in a while. I've been just kind of dealing with some stuff, so the walks have been a little tougher, but you know, um, thought I'd do one here because it's been a while. Lots has happened in the Toronto Canadian region. So, anyways, right now we're downtown. Um, we're just walking through a laneway. We're up by the TNT, um, near Dundas and Yonge, but gonna walk through and then also maybe hit up a park and stuff. But anyways, hope everyone is doing well. As you can see, the weather is nice now. It's about 10 degrees or so. I know for some of my American friends here, especially the ones in Vegas, that's cold for you. But believe it or not, it's pretty comfortable here. So yeah, lots has happened in Canada, and I just want to also mention, hope everybody is doing well, and you know. Hope you're healthy, happy. Hope your family's doing well. There's another comment going on here. I'll actually get into some of that too. A lot of drastic changes have been happening in the Canadian real estate market. So, yeah. Anyways, first things first, we've got a new Liberal government here in Canada. Well, technically a fourth term. It's pretty much the same cabinet as the Trudeau cabinet, except for it's Mark Carney, which is surprising to me. I'll be frank. I'm actually quite surprised. It's a minority government, but I guess Canadians, they've spoken, and in terms of where I guess they want things to go, they've made their choice. Well, there's a Delta Chelsea as well right here. If you folks come and stay in Toronto downtown, this is a popular location that people stay. It's pricey though, but it's very nice. But yeah, we've got basically a Liberal government. So all I'll say is obviously, right now, immigration has slowed down, and but our economy is really slow here. We most likely are in a recession. There's another condo being built. This is a different one from the other one that we went by. Okay, it's right here. It was the one that we walked by. Second one, then there's another one. Our economy is really slow. It really is. Everything is. Folks are not doing good here. But all I'll say though is in terms of policy-wise, just get ready in terms of higher prices will be coming in the future for commodities and things like that. They will reopen the borders again here. It's going to be. That's part of what their mandate's been. So, yeah, and we will get our carbon tax as well. So, you know what? That's what we voted for. So I'll just leave it at that. Just be prepared is what I'm saying. Don't over leverage yourself. Which leads to my next topic is the real estate here has. It's interesting because with the Trump tariffs, he's pulled back obviously on a lot of them. His initial the board where he listed all these countries, and he wanted to basically tax every country in the world. He's obviously pulled back on that big time, and mainly his beef was with China, right? And even that, headlines are headlines, but apparently his administration is meeting with them to. So here, Concord Sky here. So this is really coming up. They're working on fixing that. So the stock market actually has had a decent run. So in terms of like, if you really didn't make many moves during that period, you're doing decently well. Especially if your portfolio, contain dividend payers and things like that, because you're still collecting. Oh wow, look at that. Okay. It's really coming along. This is great for TMU students as well. Granted, they're obviously not cheap, right? New landmark. And hello. So yeah, there you go. If you're interested in buying, there's the information. But yeah, Toronto real estate, well, Canadian real estate, but Toronto real estate, because I'm based in Toronto, has actually gone down in price now. Most likely, obviously, prices have been declining for a while, but the real estate boards are finally reporting that sales volumes have crashed. What historically happens usually is that, this is Gerard and Young as well. Historically, what's happened is that typically, and there's Gerard Street, Bay is down there. And so historically what I was saying is that there's usually before a big price decline. So the price decline is about 6-7% what they're reporting. So it's probably closer to like 10 to 12 maybe or more, depending on obviously which property, right? There are definitely less semi and detached homes in general, but at the same time you got to remember the prices on those, the multiples are pretty high in Canada, right? So we're talking probably like 1.5 to 2 million plus. Average Canadians make nowhere close to that, right? You can look that data up. I'm not quite sure exactly what the average salary is, but it's nowhere near that. Like, those multiples are sky high. In terms of, the volumes are declining there as well. So like I mentioned, usually you'll have a decline on on an asset. So like people basically what it's saying is that people are not willing to pay up, right? So you've got like, you have a bunch of people asking, let's say, I don't know, I'll use just different numbers, small. I'll say they want $100 for an asset, right? People are willing to pay only 50, right? So as long as people holding with the $100 asset don't need to sell, they can still ask for that $100 asset, right? Maybe the true net worth is the true worth of it is 60 or 70, right? If they obviously eventually get pressured due to like either holding costs, things like that, eventually they'll lower it to 80 or 90 or 80. Eventually, have to come down to 70. It'll eventually happen, right? But the key is that a decline in volume is usually a key ahead of a price decline, right? So just keep that in mind. In condos, I think the report was it's down like 7 or 8%, but the volume decline was about 30%. It's crazy, right? I feel sorry for real estate agents out there, like, and then also the thing that's really exploding, ironically, because it's an interesting comparison, because in 2008, the derivative markets in the U.S., which involved actually real estate at the time, they blew up because people couldn't sell things. There was illiquidity, and that's what actually took down a lot of the big major U.S. banks. Well, in Canada right now, pre-construction contracts, which essentially are when you commit to buy a condo unit at a preset price. Usually it's a higher value because, so think about it this way: people 5 years ago were really bullish about condo prices, right? Oh, this is cool. See, these are nice. This is for Easter. So folks, let's say we're really bullish on condos, right? They would put down 5%, right? So let's say you committed to buying it at $1 million, okay? And you put down 5%, so it's $50,000, right? So the thought pattern used to be that, okay, well, in 5 years, I'm committed to buy this condo at $1 million, even though at the time maybe the condo was only worth 800 in present value, but because of future value, where you're expecting growth in the future, you're willing to pay more. But let's say the value of that condo goes up, right? So let's say it goes up by I don't know, let's say 10%. Okay, so essentially, what was I'm just use simple math. Okay, I know there's other complications to it, but let's say $1 million goes to 1.1, right? So now you've got $1 million of equity, and then you have that contract, essentially the right to buy it, and you at $1 million, and you paid $50,000 for it essentially as a down payment. So now there's $100,000 of equity, right? So now essentially you've profited, $50,000, right? So then some people would sell that off, make your $50,000. 50,000 on 50,000 put down, that's 100% profit. So pretty nice profit, and that's how it was working for a long time, right? The only issue is now, 5 years later, if you haven't sold, and let's say prices go down, let's say it goes down to 900, right? People are not obviously exercising it, but the thing is, these contracts, unlike a stock option contract where it expires and you don't have to buy the asset, with these as far as I know, these pre-construction contracts, people are obligated to buy, right? Because you signed on to buy. So, worst part is that also when people try to arrange to get mortgages previously, if it was at $1 million, right? And, you put down your 5%, so you're going to get a 950. But if it's gone down 10%, you've got it now, so now it's only worth 900, right? So basically, you've got to get a bigger mortgage, by that difference of equity, right? So some people cannot obviously pony up, and then they're basically trying to say they can't close, right? Now, the problem there is that now, the fact that people can't close, is creating, big issues now, right? So, builders are suing people, unfortunately. Some of these properties I've heard as well, where they like there was a blanket appraisal that RBC was offering. I was reading, and that they would actually appraise it even at the original value, even if the condo value is down like 6% or more, possibly more, obviously, because those reports are delayed. You think, why would they do that, right? Because people are only putting down 5% and it's down 6%. Essentially, they have a 100% loan to value loan. So they're basically borrowing the whole thing, right? And any drop in the future, so if it drops another 5% next month, then you're actually down another, $50,000, right, on $1 million property. People are going to, highly likely, the more it drops, the probability is that people will not pay, right? Because why would you pay on a property that is essentially not worth what your mortgage is, right? And in Canada, we can't walk away like in the States. The States, they can throw the keys and say to the bank, "I'm sorry, I'm done," right? Canada, you can't do it. Now, I don't know if people actually stop paying and leave the country, how they're going to come after you. That might be a different story. Because I've heard, it's funny, I heard in weird stories where foreign students in Canada, they used to come to the bank and they'd run up like a line of credit of like $100K. And then what would happen is they would just disappear, couldn't find them, right? And then, the bank just couldn't find it. Like they're gone. I think they went there from China, and I think they went back to China. So the bank basically just had to write it off because how are you gonna get them, right? So that was one of the things. So thought pattern would be if someone were to leave, you know, buy a house and it didn't work out, and they just moved to like China or India or someplace I guess you can't get tracked. Um, then what would happen there, right? So that was an interesting thought there. So I mean, we got so many condos going up. Like people cannot sell right now. It's very tough. If you're a renter, or sorry, if you're rents are actually going down as well, which makes it interesting because obviously that doesn't help with your carrying costs if you're an investor, right? Because rents are not going up like they used to, and then also obviously vacancies are going up, which creates another big problem for people where you have a vacancy, that cash flow obviously isn't being taken care of. So um, I guess the big point of kind of my ramblings on this is that folks just be cautious right now economically. Um, Even with these tariff wars, quote unquote, end, um, there's been a lot of damage to the economy. Folks are losing their jobs, or have been laid off, or and then also like interest rates are not going down. They're pretty much flattened out on the well, at least on the floating market. But in terms of the fixed rate, if you look at the bond yields that are traded, so the interest rates, they're actually kind of moving upwards. Which those are the interest rates that affect your fixed rate mortgages, your 5-year fixed rate mortgages. And then also in Canada, we've got that mortgage renewal cliff where a lot of the people that took took mortgages in 2020 and 2021 during COVID when the rates were really low. They're now coming up for that renewal, and they're gonna have those problems. So that's why. So I mean, hopefully, if you're out there and if you are thinking about taking on more leverage right now, I'd say just be cautious. Look at obviously your situation. Um, I wouldn't take any risks right now unless you have to. If you're holding on right now, if it's cash flow negative, you really got to really think about how long you can hold on. Um, if you look at the real estate market history prices in the 90s, there was the 80s and 90s, there was a big fall. And, the recovery did not happen for a long time, right? The funny thing about real estate is, at least with Canada, I find that, you'll have it's like 1,000 knives, slowly like cutting at you. You may not have like the big drop, right? But what you'll have is, it'll just slowly cut down and eventually it'll slowly recover. But, and I don't think obviously with all the heat that Tiff Macklin, because recently, he was a lot of questions that they were asking him, and he kind of taking the perspective like I told Canadians not to over leverage themselves, which you can look back and say, well, hey, you're the one that raised or dropped rates to zero, right? And you promised not to raise rates for a certain period of time, and then a lot of Canadians took that as gospel, and then they loaded up, right? So central bankers like that, and also Jay Powell, they won't be so quick to drop rates like a rock again, because I think I think they learned their lesson there. Thus, that's why you're seeing rates kind of hang around now, right? So I mean, keep that in mind. On the investment side, if there are a lot of opportunities for a lot of positive yielding assets, right? Like that's a good thing. Things are obviously falling apart in the economy, but you're able to find some nice yields on some dividend-paying stocks. So that's an opportunity. So really, if you have assets like cash and capital to deploy, it's favorable. But if you are in debt, um, it's hard because that that's eating away at you. So, anyways, well, this was 20 minutes, a little bit longer than normal. But anyways, I want to just thank everybody for watching. Thanks for walking with me. I hope to do some more, and I'll talk to you soon. Thanks.